What's up and what's happening there, you blessed and beautiful souls? Kiara Cass here today with the Crypto Bliss Show, and I have a lot to share with you in this video. And this video is gonna completely, no, I'm just kidding. It's gonna completely throw your mind out the water. Okay, so with that being said, guys, this video is going to show you about the banking crisis around the world that we are currently experiencing, what to expect in the near future to medium term future, and what that looks like for people like, just general people across the space. And the world is really being hurt at the moment in terms of a liquidity crisis across the world. But that's only if the Fed doesn't turn on the printers again. So we are here to do incredible things together, guys. And I need you guys to know that the best, most beautiful opportunity that we have together here for us is going to be now. Okay, for the next 2 to 3 years, we are going to have the craziest time of our lives. Some things will be good, some things will not be good, but at the end of the day, if you're positioned right, you're gonna make a lot of money that you never had before. So with that being said, I hope that you are feeling good and excited. And please, guys, it took me a long time to do this research for this video for you, so a thumbs up would be really appreciated. Continue to grow in my subscribers would be appreciated too, and sharing this video if you find this video very valuable and informative, that would be much appreciated. So let's not waste any more time here. Let's rock the show on, and let's see what the banking crisis has to bring in for us right now. Boom. Okay, welcome to the show, guys. So first of all, let's just do this a little bit differently today. Let's go and have a look at the Bitcoin chart and what happened here. So this is the 30-minute time frame. Okay, Bitcoin basically fell out the tree and then whiplashed back up and is currently being put under pressure to come back down. Now I drew this triangle for you, and on my video here, which I did for you earlier on, I showed you guys that if we retested and if we broke out of this level and we basically had to come back and retest it, which we've already done, we retested it, we couldn't get back into it, that means that we're probably going to come back a little bit further down. Now, where does this take us, guys? Look, I think right now to here at this point would be the absolute most that it could come down before it made another test back up, okay, to where it's basically is more or less now, and that would then bring us a little bit further down if that is the case. Now, why did Bitcoin drop like that? Well, let's just have a look at the dollar, okay? Because the dollar has been non-stop pumping the whole day today. We've literally had buy signals from the dollar the whole day. And as you can see here in the price of Ethereum, this is the day in Ethereum, it looks as though there's a bit of a top out here. You can see we're trying to find support on this level. So we may just, but that means the money's coming out of dominance, Bitcoin dominance, and into other altcoins where people can actually make more money. So you can see BTC dominance is actually making a trend for lower time. There you go. That's the trend on the BTC dominance on the 30-minute time frame. And if we move this up to the 4-hour time frame, we would essentially see that we are basically in a downward channel. We've got resistance down here. So this means that if we can't get back up above that resistance, essentially this line, we ain't going to go anywhere with Bitcoin dominance. So which means that people will start selling their Bitcoin and getting out of Bitcoin positions and get into altcoins. Okay, now with that being said, I want to talk about the liquidity crisis or the banking crisis. Now, let's start off with this top 50 banks in the world. Okay, so you can see here, this is the assets in millions, this is the local currency, and basically capital in US millions and the balance sheet date. So this is a bit old, this information, but nonetheless it is still extraordinarily helpful because nothing has changed, not much has changed since this this time. And as you can see, literally China's got 4th place. It's had 4th place, 1, 2, 3 and 4th place, okay? And it ain't going anywhere. It's going to hold on to those positions. Then next you only have the first American bank over there. Then everything else yet again, except for this one, Bank of America, and then one last one down here somewhere. Wells Fargo. Except for those 3 exceptions, okay, and maybe the Toronto Dominion Bank. But literally all of these banks on here are mostly Chinese, European, and British, okay, which is interesting. Now that leads me into my second article here, okay. Now this article is by the world's largest 100 banks in 2022. Now, yet again, China, okay, they haven't moved their place. They're not gonna move their place, because if you look here, okay, JP Morgan Chase is the next bank, okay, with the first American bank. Their previous rank was 6th, and they've moved up to position 5. So they've moved up a little bit. But their balance sheet is still 3.7 trillion, okay, as opposed to China's industrial commercial bank, which is 5.5 trillion. Okay, because this is total assets in US billions, and 5,000 makes 5 trillion. Okay, now you can see here the Bank of America Corp, all these banks. I mean, this is hectic, guys. I don't even know what to say to you, because the green is European. Here's the red is down a little bit. Here's Japanese and Chinese banks. Then you got Wells Fargo. Then you got UK, Spain, France, China, Germany. Here's another US bank, Morgan Stanley. So there's a very small handful of American or US banks in this list. I mean, there must be 6 or 7 here. Yeah, about 7 of these banks, okay, that are in this top 100 list. Now, 7 banks, 7 out of 100, okay? China is literally dominating. Look here, 3, 4, 5, 6. I mean, look at this. 10, 11, 12, 13, 14, 15, 16. China literally has maybe 17 to 20% of this entire list. Okay. Now that is a very scary thought. Okay. Especially when we are looking at this. Now this is American banks. This article is America's best banks. Okay. I wouldn't quite classify them as the best banks, but it's America's best banks. Now, I want to show something to you guys. This is the total assets. Let's go and have a look here, okay, at our beloved SVB, okay? So SVB Financial Group, situated in California, Silicon Valley Bank, has got $213 billion on its balance sheet. Now, we aren't even looking at the rest of the banks here, which, I mean, on average, I'd say most of them have about between 20 and $50 billion on their balance sheets. Now, guys, 3 or 4 of these banks go under, literally will equal the same amount as all of these other banks. And no doubt that the smaller banks are hedging and leveraging against the bigger banks, okay? Because that's what they do. So, I mean, you've got East West Bancorp, which is in California, Pacific Premier Bancorp, 22 billion. I mean, that's nearly, like, that's 85 billion just there. Okay, so there's huge money in these banks just in the States as well. Now, I want to show you a very scary document. Okay, if you want to come over and have a look at this, the top 1,000 world banks. I'm not going to show you that article, but this is what I want to show you, because this is the global bank country by country outlook for 2023. So I'm not going to go through the whole thing because it's 103 pages. Okay, but all I want to do and all I want to show you is very specific charts here. So the borrowing costs are increasing sharply. So when you go to the bank and you want to borrow money, they have increased very sharply since 21 all the way through to basically now. So these are all the banks here. Now you can see the American bank is all the way up here. Okay, where's the Chinese bank? The Chinese bank isn't even on this because they're not increasing their costs as much as the rest of these banks are. First thing, okay, first warning signal. Okay, second warning signal is how much will weaker growth hurt banks? So all the way from the blues 22, orange is 20, yellow is 23, purple 24, and green 25. US, Euro, China, Japan, UK, India, Brazil. Now, India is in for the freaking ride of its life, okay? And something is going to happen out of India very soon. There's no doubt about that, guys. Now, why am I saying that? Well, because look at this, okay? So this is real GDP forecasts in annual change. So gross domestic GDP, okay, is sitting way up here, which is great. But the GDP for the America is flatlining. The GDP for Japan is flatlining. Look at China's GDP. China's GDP is extremely healthy up there with India at the moment. Now, what does this bring us to? Okay. Buffered, better asset quality and stiffer regulatory capital requirements. It is good. It is phenomenal. Okay. Now, this is what I want to show you as well. Stronger capital since the GFC adds to banks' buffers. Tier 1 ratios by region, group 1%, 1 banks percent. So Euro is up, Americas is actually turning down now, and the rest of the world is pumping up. Okay, so what does this say? This shows us that the American economy isn't actually doing as healthy as the Fed says they're doing, and especially against many other economies around the world. So this is going to blow your mind out the water. So non-performing assets as a percentage of system loans, okay, selected G20 jurisdictions, Germany, Japan, US, and the UK. Look what happened. 2008, they're all pumped, okay. Now look what happened. They've all dropped off, okay. So what does that look like? That looks like this is probably going to start picking up again. And non-performing assets will start to grow, okay, which is amazing. So the downside risks would hit corporates and then the banks, okay. So that's very interesting, that article, because this now, okay, is going to show us something that is going to, okay, so regional default insights. In the US, the number of defaults in 22 and versus 21, there were 3 defaults in 22, plus the 29, and then 35 in that in 21. So Europe is 3, 14 emerging markets. So you can see that between emerging markets, Europe and America, we have a lot of bank failures here, okay? And as I showed you guys in my video here, this one and this one, I showed you guys that we are to be expecting about 300 bank failures, let alone what we've just experienced with SVB. Now, this shows us that higher interest rates will test the debt in households. So household debt as a percentage of GDP in selected jurisdictions. The blue is 2019, blah, 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 all the way to 23. Okay, so the countries that are being tested the most is Switzerland, Canada, Australia, South Korea, New Zealand, UK, US. Look at this, guys. China is keeping their economy under control. They are literally the least indebted versus the highest interest rates in the world right now, okay, according to this document. Now, what does that mean, okay? The Americas are really getting up there right now, and especially because the America is running on the dollar. The whole world is running on the dollar, and Russia just decided to buy commodities, i.e. oil, gold, silver, etc., in the Chinese renminbi, okay? The Chinese yuan, okay? What does that mean? They literally are ganging up against the dollar to get off the dollar standard. That means that the dollar is going to be less used over time because of the way that the dollar has been treated by the money printers, just switching on all the time. So the Chinese property development on non-performing loans will spike in 2022, okay? Property development loans is boom, okay? Look at this, guys. We have to say to you, okay, country outlooks. Don't worry about that stuff right now. Banking industry, country risk assessments, okay? So the United States is a category 3, essentially, okay? What does that mean? Okay. Let's have a look here. So it will be here. Banks remain in good shape with recession looking likely. Okay. So we are going to expect a recession. Okay. Look at this. These countries that are sitting at 9, they are extremely high risk right now. What does that mean, guys? Because essentially, when you have high risk banks across the world that are all hoping that the banks may turn and that the feds are going to come and help save them, that might not be the instance, okay? Because when you're sitting at this point, okay, we literally have a recession that is busy looming. And as you can see here, Greek banks are very high risk. Cyprus banks, high risk. Look at the rest of them. The UK banks are medium risk. It's like the States, okay? Spain and Portugal and Italy are, they're not doing too well. Now let's go and see what the rest of the world looks like there, okay? Because essentially I want to look at what China and Africa are busy going through at the moment, okay? And what that looks like in terms of those banks too, because let's see the comparison of, so this is emerging markets, okay? South Africa is sitting at a 6. Now I live in South Africa, guys. That's not healthy for me, okay? Because we're a little bit more towards the high risk. Look at Nigeria, 10. Egypt, 10. These banks are 8, 9, and 10. Guys, that means they have a huge liquidity crisis. That means that we are going to see more banks fail. They don't have to be banks in the States, because as an example, whatever, it is a bank in Timbuktu, okay? And that bank borrowed money from the States at a specific interest rate, and now it can't pay that back. Where does it get the money? Where does the American bank get the money back from? It can't, okay? Where does the Timbuktu, where did they get the money to pay this back? They can't pay it back. Hence, turning on the printers, okay? Now, guys, that is very, 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 very extraordinarily dangerous, because if they can't pay them back, they literally are indebted to that bank, and that bank is indebted to the country that is operating from. Now, what does that mean? That means that your sovereignty could be literally taken away from you because of this. Do you want that? No, I do not believe that you want that. I believe you want your sovereignty, and through this, okay, that is why crypto is changing people's lives. Not only because of crypto being decentralized, okay, but actually because crypto is yours. It is your money. It is your bank in the palm of your hand, okay? What does that mean to you? It means you're in control of your financial life, not the banks. The banks don't dictate to you interest rates, blah, blah, blah. Bitcoin does not have an interest rate, okay? Bitcoin is 21 million. There'll never be any more than 21 million, and that's that. End of story. So the more they print the money, the higher the price of Bitcoin in US dollars goes, okay? And that's what it's denominated in right now, because that's what they chose to do. So this has been a very interesting video for you, because you can see China and India are in pretty much the same boat. And you can see most of the Indonesia here is sitting at about a level 6. Mongolia is about a level 9. But Japan is at a level 3. Very interesting, Japan is at a level 3, especially because their system is broken. Okay, whereas China is sitting at a 6. So that's the same as South Africa, essentially. Now, does that make China scary? I don't think so, because China are extremely smart, and they saw this coming a long time ago, and that's why they started building up on gold reserves and other commodities, buying metals across the world. That basically showed us that there was a lot of damage that was about to come into the markets through the instability of fiat currency, which shows us that we have a very, very, very interesting moment right now. Now let us go and have a quick squiz here. Okay, so Argentina, negative. Australia is the one positive. Greece, they're saying is positive. I don't get that, because their article up there said no. But negative, 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 negative. Okay, let's come down. Let's try and find the US, okay? there you go, the US is saying it's positive. That's very interesting. Okay, South Africa, stable. So we're stable in South Africa, guys. This article has been pretty cool to look at and research. If you enjoyed this video and you want to know more and more and more about crypto and other things that are happening in the market with the banking crisis, because somebody literally just took $200 million worth of Bitcoin off an exchange, okay, which essentially was the very reason this had a drop-off. Okay, now you can see there's another sell signal that's looking to come into Bitcoin right here. Remember, this is only on the 30-minute time frame. We're not looking long-term right now, but essentially Bitcoin on the long term, and if we have a look at the month, okay, hopefully the month stays more or less where it is right now, okay, because the month pumped up to there and pulled back. No problem. The month can even pull back down to 20,000. I'm happy with that, guys. Now, essentially, we should, and if you look at the way that candles happen, okay, you generally get one big one that pumps and breaks through some of the resistance levels to test the market, and then essentially you start to get runaway candles. So, what does that look like? That looks like this point here, okay? This is your breakthrough candle. It's breaking through many resistance levels. It closes above those levels to confirm that it's going up. There's a small retest, and look at this. This took 2 months to retest here, and it made new lower lows and new lower highs. But the moment it does that, boom, can pull back a little bit. But the moment it breaks up and out, guys, look at this. 1, 2, 3, 4, 5, 6 months it literally took for Bitcoin to do a 410% gain. Wow. If you took a leverage trade doing that, yes, it's very risky with my link down below, but if you took that trade, you guys would literally have made 40,000, am I right? 10x? If you do 20x, you do 80,000 x percentage gains on your trade. Now, that is literally taking $100 and converting it into $8,000. $100 into $8,000. You can buy a quarter of a Bitcoin at that, with that, essentially at today's price. So we're coming up to the signal here. We're coming up to another resistance line. Look at that meeting very nicely. This is on the monthly. Guys, I do believe that we'll have a little bit of sideways action here for a little moment or two, and then we'll continue to push through. My purple box here is the box that we need to get above, and once we get above this box and this green line, guys, and we break through, pull back and find some support, just like this. So we might pull back, break through, hit there, pull back, break through again, pull back, and then we will probably, in fact, we wouldn't even do that last little bit. We would probably hit up here, maybe pull back down to this level, maybe hit up here, pull back down to this level, and then we would make our way up to the previous all-time highs and potentially break through the market. Guys, this video has been wonderful to do for you, my special and blessed community. I do appreciate you guys very, 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 very much. Sorry. Okay, so please make sure that you guys are hitting that subscription bell on my channel so that you know when I do videos just like this for you guys. Blessings and love and light to you, blessed and beautiful soul. Love you all. Take care and have a blessed and awesome strong end. Hit that notification bell because I'm going to do crazy videos for you this weekend. Okay, see you there.